Welcome back. Let's welcome in the management at Kirloskar Pneumatic now. They are joining us. Thanks so much, sir, for taking out time for us. So Q4 revenue was impacted owing to weak demand of CNG compressors. How is the demand in both domestic and exports looking as per early trends of Q1 24?
The demand for CNG is picking up. We are still not seeing the kind of traction that we expect from hopefully Q2 and thereafter, because the Kirit Parikh recommendation for gas pricing has been implemented from April. Consequently, there is already a pickup in gas consumption. Consequently, this should transfer into more commissioning of CNG stations. We expect this to scale up in the next quarter and thereafter.
Mr. Srinivasan, this is Vinny joining in the conversation as well. What we also want to know that, your products, they cater a lot to segments like oil and gas, railways, autos, pharmaceuticals. And we're seeing a lot of Capex pick up in these spaces, particularly the railway side. So which are the key segments do you think that will likely drive the growth for the company in FY24?
Yeah. So if you look at the segments that have done double-digit growth last year, it's largely been metals, cement, some amount of construction equipment, etc. We are catering to all these. Oil and gas has been a bit of a patchy growth. The capex spends, though they've been announced, a lot of them were impacted because of the uncertainty in the gas prices. We are primarily in the oil and gas sector connected to gas, and so consequently we were impacted in the domestic market. As far as exports in the Middle East is concerned, it was a record year for us. Our exports was at about 170 crores, which is almost more than 6 times what we had done earlier. And this trend hopefully should continue. We still have a lot of orders that are being under discussion, and hopefully we should see them finalized for execution this year.
You have an order backlog of around 1150 crores. What is the order execution period? And considering that there are some finalization slowdowns from the client last quarter, how is it looking now?
Yeah, so our order execution cycles range from about 12 to 16 weeks for equipment to between 8 to 10 months for large packages. Today we have a mix of orders. Roughly about 60% would be equipment, spares, etc., and about 40% would be projects. This keeps varying depending on the quarter. Projects take longer cycle, equipment are much shorter. Today, at the moment, the mix is more towards equipment in whatever orders we have on hand. This will allow us to execute quickly on the first phase of orders. The larger projects or packages, as we call, are being negotiated. Hopefully, we should see them finalized very soon. As we speak, in April, we booked almost about 200 crore plus of orders, which will give us some headway for growth in Q1 and Q2. We are still reasonably confident that our guidance of doing 2,000 crores in 2 years is still on, and we should get there.
Also, in just terms of a massive ordering to take place on the CGD network, where you enjoy almost 50% market share. So what benefit do you foresee here then?
The CNG gas compression systems is a market that's been announced with all the bidding. Up to 93% of the geographic areas have been allocated. They had a 2-year hiatus for execution coming from the COVID challenge. Now that is also behind. Now there will be an accelerated execution because they all have a deadline in which they have to complete these installations. We expect there should be a boom in the installation of CNG packages, at least in this year. We are very well prepared for this. We are holding significant inventories, and we will be able to execute post haste as soon as the clearances come.
So your customers are mainly from engineering and other capital intensive industry, whereas the demand is cyclical. Will you see any impact of so-called recessionary fears?
Yeah, if you look at it, the global economy is likely to be flattish or grow marginally. Indian economy anywhere between 6.5% to 7%. Now, most of our lead indicators for growth are GDP plus. So we expect to grow always GDP plus, and of course, then add the inflation and then the market share, which all takes us to around 20% plus growth. This is very possible, and I think we're clearly mapped out. Yes, what you said is partly correct, that there is some part of this growth coming out of capex cycles, and they tend to be cyclical. Now, but that is largely on packages. and primarily on the oil and gas space. Today, oil and gas space is on fire. It's booming. At least for the next 3 years, there is a strong visibility of orders. So consequently, I think we are well placed at least for the next 3 to 4 years to ride this big cycle.
And you are aspiring to cross the 2000 crore mark in FY25. What will be the mix in terms of exports versus domestic demand and the segments which will be seeing in terms of growth as well?
Yeah. So what we definitely know is the mix between the segments is going to be 25% air, about 35% refrigeration, and about 45% would be the gas business, plus minus. That is the split, and it is always the same. So for us, the way we have modeled our business is that we would like to keep it partly equipment, partly packages, which allows us execution speed as well as certain amount of smoothness of execution. That's the way it's going to be. As far as export business is concerned, we would aspirationally like to go towards a 25% export, but with the current, let's say, slowdown on Capex spends, etc., in many sectors abroad, our export is going to be around 15% to start with. The domestic Capex cycle is at a peak, so we would like to do more here. So it would be 15% exports and about 85% domestic.
Thank you so much, sir, for taking out time for us. Good to get perspective. But it's raining a lot of corporates led by earnings.